Today's update is for corn. It's Wednesday, January 6th, 11 o'clock Chicago time. Given the state of the market and going into the new year, as I described if you watched our soybean video update, I like to go into the new year with a clean count and try to take advantage of this time of year to wipe out everything I think I know about the markets and rechart them swing by swing. I did that yesterday for beans, and today I'm doing that with corn. So I've wiped out the charts completely and took a fresh look at all the different multiple time frames to see where we are, to see if my count is correct, to see if there are patterns or price relationships that I missed over the last few months. So what we're looking at here is a 3-month or quarterly chart for corn. And what we're trying to do is look at the primary trends. Because prices have gone on such a run, you really have to break charts down into 3 different time frames, right? If you listen to Gann and his work, the quarterly chart is the master chart. The weekly is the trend or intermediate chart, and a daily chart is really a corrective chart. And so if we start to look more closely at hourly and daily charts, while pulling away from the primary and weekly charts, that lesson I've learned over and over again in my trading is one that gets you in trouble because you get lost in the minutia of things without understanding the big picture. So what I'm doing here is looking at some longer term charts because we've clearly had a big pop. And now we want to know where the headwinds are blowing. What is the bigger picture here? Obviously, we've got a run. Obviously, it's pushed through all of our upside price targets. So now what? And as the new year develops, we want to do that with a clean count. So the reason I'm looking at this quarterly chart is to see some of the big picture price relationships and if they matter or not. So, a lot of times technical analysis gets a bad rap, and this chart is such a reaffirming study and why looking at price makes so much sense. If we look back to 1971, you can see this first swing up is in 5 waves, right? Its throwback in 3 waves measures exactly to this 505.5 level, giving us our first corrective swing higher, with a throwback to a key fib level by this red line, right? So you've got, over this entire time period to 96, a symmetrical price relationship. And if you look at the impulses and the corrective swings, give you a pretty good idea of where to trade this entire time. So to negate all that and say that's old news just doesn't make sense. So if we look at what happened from that period, you have a symmetrical Elliott wave swing, a throwback to this red line price relationship. Then you start to look for, okay, now that we're at this level, which happens to be at the median line parallel to the tick low, we've got another impulsive 5 waves up in A, which tells us to look higher, hitting the median line. This is a study drawn against these levels in 87 and 71 that is still relevant in 2000, right? So we got 5 waves up. That's either 1 or A back in B. And then we've got an impulsive 5 waves up. So this 5 waves up gave us this 5 waves up. It happens to be within a larger corrective pattern. And if you take the symmetry of this pattern against the complete one that we've just detailed here, it measures 837 3/4 with price hitting that with an impulse higher almost to the tick. And that happened in 2012. From symmetry and math, that goes all the way back to 71. So, do charts work? Are they valuable? They sure are to me. So, why do all this? So what we're looking to see is If this corrective pattern and price structure is important and has lasted all this time, it probably would weigh into what's happening now. So taking a detailed look at the sell-off against that projective pattern shows the correction that we're in now. You've got 5 waves down, which is either an impulse or wave A. I'm counting it as A, given the corrective structure. And so now we're into the meat of what's going on right now. 3 waves up off of the same mathematical bounce that we got on the prior corrective pattern. So the math of this red line is the same math of this red line. So it's giving us mathematical symmetry as long as you understand the pattern, the time, and the structure of what's happening, right? So 5 waves down in A, 3 waves up against that red line gave us the idea that this is a corrective pattern, right? 3 back, 3 up again gives us a larger degree, wave A. This black line symmetrical measurement is reinforcement of that price structure. So 3 up in A, smaller time frame, leads to an A larger time frame with a throwback, retesting that red line. And now what we're in here is a swing higher delineated by this median line study, where right now we've got sort of a spinning top doji-esque type of candle right at the prior wave A calculation. Interesting. It's also creating this spinning top at the prior wave 4 smaller degree of the swing down in A, which is the natural target for an ABC correction of an impulse. Interesting. This blue line projection here is an extension of this entire structure. So we're building this corrective pattern with a price target. It's blown through its first symmetrical one, like this black line here, which tells us it's wave C. And that wave C projection is at 553 within this larger purple projection zone between 518 and a quarter and 581 and a half. All of this is happening with positive momentum, and you can see by our volume profile the somewhat symmetrical distribution around this teal point of control, all the way back to 71. Right? So we're forming a bell-shaped distribution all this time while price is working within a corrective pattern with very clear mathematical price relationships in Elliott wave structure. This level now, we're getting into the specific targets again, right? This wave A extreme also being respected by the wave 4 throwback, and now with a spinning top at that same level, should catch our attention. This purple projection zone is the correction, the high probability correction area that I've delineated is where I'm looking for price to go, correcting this 5 wave swing down. And this entire structure here that is corrective and measured and following an ABC pattern with its most recent push higher here is measuring this 553 as long as momentum is corrective. Let's look at a monthly now, breaking down the quarterly. Here's our black line projection, 837 and 3/4. We're looking at what happened. What did price do when it hit that upside target after all those years? Clear 5 waves down, 3 back up. We're dealing with a correction in A. 3 down in B. A double in wave C. Wave B holding that red line key level for the 3rd time with a turn up in momentum and an impulsive count that I'm looking for in wave C. See, the breadcrumbs, the details, make what's happening more clear versus listening to the news, listening to dry weather, listening to supply and in the day-to-day noise. This has been developing and building for some time, for years. This isn't a seasonal issue this year. This is a pattern that's been correcting for some time. And so now we're into the area of wave 4, and each individual trader, producer needs to decide the risk reward of playing longs at this point in here and whether it's worth it for them or not. And if you're looking to make sales, if anybody's got anything left this year or new crop, this is a key level. Could we drift higher in a B wave? Sure. What are the high probability setups and Elliott wave analysis that gives us some teeth to what's going on? Right in here. This zone, from where we are here at this black line, the wave 4 extreme, the wave C projection, and this zone. If I look at the move up here, bull markets always make you pay to get in, right? Where would you have gotten in here? Of course, this is a monthly chart, so we'll break down the smaller time frames, but we always have to pay to get in. But I would watch your risk reward for new longs as we're into the money here. We're into the important areas. This move up looks like an impulsive move to me. Let's break it down even further. Here, now we're isolating the move off the wave below. And we're trying to look at the price structure here to say, okay, well, we've understand the big picture a bit of what's happening, right? So where is the upside in this market? Where is the top? The swing up in 3 waves here in A gives you the first clue. Then you've got a throwback that does not go beyond the extreme of the origin. And this entire structure is 3 up in A. That isn't the way an impulse would work, where you've got 5 waves up, 3 waves back, another extension in 3, 5 waves up, which has got me looking at the probabilities of where the market can go within this price structure. I learned a long time ago, and I certainly don't know everything. In fact, the more I know, the more I realize that I don't know everything about anything. But you have to trade the market that you're in and not the market that should be. I've learned this lesson over and over and over and over again. So we have to use the breadcrumbs that the market gives us to make reasonable insights into where price could go based on that, and not based on what the weather might be or what people say on their talk shows. We have to look at the price structure and understand the answer is in there somewhere, and we just have to have enough patience and discipline to play what we see on the charts and not just what we hope to be. So you have to trade this as a correction, given that you've correctly identified it as a corrective structure. So when I look at this, I see 1, 2, 3, 4, 5 waves up in 1, very tight, shallow throwback in 2, because you've got a strong market working this larger time frame correction. This swing is a bit messy and can be an ABC, so this could be counted as ABC higher. This is what we're looking to delineate. When I do an extension target off of this swing, I get it hitting this target here where we are now with this spinning top. If the market is going to push up to this extension target, since it's blown through its A equals C symmetrical target, that's the next logical Fibonacci target, which also lines up with this black line, larger time frame, right, in this wave 4 area. See, this prior wave 4 is strong in Elliott wave for a reason. It's a strong level to watch. We're looking for a complete ABC. That's going to either happen in ABC with an ABC and 3 waves higher to this extension target, or in 5 waves. We've hit the wave 3 extension now. So we're going to either look for a shallow throwback in wave 4, which, based on the tight nature of this one, will probably go sideways for a bit. Because the rule of alternation in Elliott wave is that if one move is sharp, the other is sideways and vice versa. With one time you zig, the next time you zag. The market doesn't do things in the same manner. It goes back and forth. So given this tight throwback in 2, if we're going to get 5 up here in this target zone, we're going to look for a 3-wave, perhaps triangle, diagonal, something here that's going to chew up some time. And then we'll get our swing higher. And we'll measure that zone of where that wave 4 is as this develops. If we get a turn down in momentum and this turns into a spinning top and we get a break lower, we'll measure that and look for a zone to get long in wave 4 based on the price structure and the math of it. And this would be the price target in this purple projection zone between 518.25 and 581.5, ideally targeting 553. That long would be a bit aggressive given the risk return of what we're doing here and the strong run. That's up for trader to decide whether they want to play that final swing. We've taken the lion's share of this run up, and whether you want to try to squeak out the last few cents is up to you. If this is a complete ABC higher at this extension target, very near the 50% fib of this level, and within wave 4 still, it's tight, that could be a turn for this whole market lower. So we'll have to see. Based on where we are right now and the pattern we're trading right now, could prices go deeper into this wave B? If we pull up the monthly chart again, sure. The relationship of this fib support level here on the way up is a deep fib retracement. So we could alternately also do a deep fib retracement up here. But right now today, the highest probability targets are here in this prior wave 4. And so that's where we're going to focus. If you're going to make future sales, that number for corn is a strong number. Past couple of years, we haven't had anything near it. So if you're in this area, you've got strong prices here. And this wave 4 is the first target. If price can break above there, we'll look at the price structure of these swings higher and see what our higher targets are. But for now, this is the area to watch. Do we have a complete ABC here at the cluster of these two areas, or are we going to get a throw back and 4 and a swing higher? That's what we're looking for. That's what we want to stay on top of, and I will chart it day by day and talk to you soon.